Before we begin our comprehensive analysis of Russell 2000 Index, an important disclaimer. Market returns are never guaranteed, but when we do the fundamental and technical analysis, we do get an edge in the market, but risk management cannot be ignored. Everyone is talking about the S&P 500 and Nasdaq 100 these days. But there is another major US market index that quietly tells a very different story, the Russell 2000. It represents America's small cap universe, the companies that build, innovate, and grow from the ground up. In today's video, we will look at what the Russell 2000 actually is, how its valuation compares with historical data, and then we will go to the price chart to undertake the comprehensive multiple time frame technical analysis using top-down approach from monthly to daily. Let's begin by understanding the basics first. What is the Russell 2000 index? The Russell 2000 is one of the most important stock market indices in the United States. It includes about 2,000 smaller listed companies, so we can call it a small cap index. These are firms that are much smaller than the giants inside the S&P 500, but they often grow faster when economy is healthy because small caps depend more on local demand and financing. The Russell 2000 reacts quickly to the changes in interest rate, inflation, and credit conditions. In short, when investors believe in strong domestic growth, this index usually leads. And when the economy slows down, it often underperforms the large cap indices. Valuation check. Now let us look at the valuation. One common measure is price to earnings ratio, or simply P ratio. It tells us how much investors are willing to pay for $1 of earnings. As of October 2025, the Russell 2000 is trading around 18 times earning. Over the last 5 years, its average range has been between 13 to 17 times. So today, the index is slightly above its recent average. Not extremely overvalued, but not cheap either. This shows that investors are already expecting earnings to improve in coming quarters. However, remember that nearly half of the companies in Russell 2000 are not consistently profitable, which adds some extra layer of risk compared to the large cap indices like S&P 500 or Nasdaq 100. Chart analysis. With that background, let us move to the charts. I will not take you through top-down technical analysis, starting from monthly chart to understand the broader trend, then zooming into weekly and daily time frames for price action and the structure. We will also compare the relative strength of Russell 2000 versus the S&P 500 over the last 52 weeks to see whether small caps are beginning to outperform. This is the monthly price chart of Russell 2000 index. What we can see with the help of the historical price action is this trend line is valid since February 2009. Price has taken support here, price has taken support here, price has taken support here, and price has once again taken support and formed the bullish pin bar candlestick pattern. And this trend line is quite in proximity of EMA 55, suggesting that this trend line is acting as a very established dynamic support in Russell 2000. Look at this trend line, which is joining the resistance pivots. Price has taken resistance, multiple resistance can be seen. Now combining these two trend lines, it indicates that the price is trading in a rising price channel. But here some kind of formation of a continuation chart pattern is underway. This is the impulsive wave. Prior trend was bullish. So this could be the potentially upcoming continuation chart pattern, that is cup and handle chart pattern. But the price is currently trading at the resistance area. Price got rejected over here, got rejected over here. As this resistance level of 2500 level is taken out decisively, and probably it might move to the level 3100, which is nothing but 61.8% expansion level with respect to this rounding pattern or continuation chart pattern, and 100% expansion comes at around 3590 to 3600. Now let us take the historical price action and the oscillation it is making like this. It is taking resistance, support. So in the cyclic phenomenon, it is likely to go on upper fiber of this rising price channel, which further confirms that probably this zone can be achieved, which is nothing but 61.8% expansion to 100% expansion by using the Fibonacci extension tool. Look at the supporting indicators. RSI in monthly time frame is above 60 level, showing the good momentum in the market. At the same time, MACD is also showing bullish crossover, and histogram is under formation above zero line. Now we are referring to the weekly price chart of Russell 2000. We have discussed the prices at resistance area. We can see the shooting star formation in the previous week, and this is the area of resistance, So if any candle closes above 2500, and if there is a follow through of the high of that breakout candle, then we might see some upside momentum developing. Look at RSI. In weekly chart also, RSI is above 60, and it is taking support at 60 level, which is a typical sign of the security under markup phase. Look at MACD. MACD here too shows some kind of loss of momentum, but still it is in the bullish territory. Now let us check the relative strength with respect to S&P 500 index. Here it was underperforming. Now it started going towards the zero line, and now it is oscillating for a few weeks near zero line. So there is a sign that it might start outperforming once this rounding pattern breakout takes place. But as of now, it is slightly underperforming S&P 500 index. Now this is the daily price chart of Russell 2000 index. It was in a downtrending move in the recent past, and here there was a death cross also, but now the market structure is higher highs and higher lows. At the same time, we can see over here golden cross has taken place. Do we have any kind of reversal chart pattern? So I'll tell you by drawing it. This is the left shoulder, and the price has gone up, then form the head over here, and if I do it like this, you can see the formation of inverse head and shoulder and a breakout. So overall structure is emerging, and it is now currently trading in the markup phase, where the price is trading above all critical moving averages, and now the slope of SMA 144 is started inclining up. So it is in the marketplace. Overall trend remains bullish. However, the price is consolidating in a narrow band, and it is a good sign in a way, because if it gives a breakout post consolidation, the breakout would be much healthier. Conclusion. So that's a quick overview of where Russell 2000 stands right now, technically and fundamentally. Small caps often move ahead of the broader market when the economic cycle turns positive. So it's always useful to keep an eye on this index. If you want to learn how to analyze the markets step by step and build your own trading and investing framework, check out my Zero to Hero English playlist on the main channel DK Sinha. The link is given in the description below. Learning never stops with DK Sinha.